Let's talk a little energy debate. Exxon and Chevron reporting blockbuster profit in the second quarter, which could prompt some fresh scrutiny from Washington and high energy costs. For more on this, I want to bring in Heidi Heitkamp, former U.S. Senator of North Dakota. She's a founding board member of the One Country Project, a CNBC contributor as well. Jud Gregg is also with us this morning, former U.S. Senator and Governor of New Hampshire. I want to thank both of you for joining us. There is going to be a debate about this, I think. I mean, if we're not having it already, in terms of what you think the role and responsibility of these companies is supposed to be. Heidi, I'll start with you.
Well, I think that Joe made a good point a couple of minutes ago about profitability of oil companies. We can't just look at a couple quarters. And I know I sound more like Judd than Heidi, but I think that it would be wrong as at the same time that you're asking these energy companies to invest in a new energy economy, to invest in new drilling, new investment. If you start just focusing on one quarter saying, see, it's all their fault, I think you really miss the bigger picture. And I think it's really important that we start talking about not just public investment in energy, but private investment. And I think a lot of these companies are very willing to see this transition through. So I hope that the focus isn't just on profitability, that we look at the supply-demand economics, we look at investment decisions that are going to have to be made in order to provide energy security for America in the future.
Judd, I mean, is this, we're going to sing Kumbaya this morning? Is that what's going to happen?
Well, certainly I agree with Heidi on that point. I think what you got to focus on here is the hypocrisy of the argument. I mean, first you got look at this bill that's just been proposed by Schumer and Manchin. They're going to take $700 billion out of the productive side of the economy, and they're going to put it into the dependency and subsidy side of the economy. How inefficient is that? That certainly undermines profits significantly. I guess if they want to undermine profits, that's a good way to do it. But I didn't realize that profits were bad. I mean, basically a company can't function if it doesn't profit. And who gets the profits? Well, the people who work for the company and the shareholders of the company. And the shareholders happen to be public pension plans to the extent they aren't towing the ESG line relative to oil companies. But it just seems it's just a lot of hypocrisy to be attacking the fact that these oil companies are suddenly making money when 2 years ago they were losing a lot of money, and maybe 3 years from now they'll lose money again, especially if the ESG movement gets their way.
But what is the answer then when it comes to some of the high prices that we're seeing? Do you believe that companies can gouge, or is your view that gouging is a misnomer because it just means that the market is what it is?
Gouging is a New York Times word. No, listen, as a very practical matter, prices are coming down. And why are they coming down? Because the market is responding. There's demand destruction occurring across the whole spectrum of oil and gas, and that reduces prices. And production is slowly going up. We're now up to 750 rigs. And that's the market working the way it's supposed to work. And I fully expect that the price of gasoline will be down to $80 a barrel here before we get to fall. And as a practical matter, that's where these companies make money, but don't make a huge amount of money. And it's where you get the supply you need in order to run a very modern economy. I mean, you can't run our economy on windmills and solar panels.
Shepard Smith here. Thanks for watching CNBC on YouTube.